Good morning, everyone. Thank you very much indeed for joining us. I am Douglas Blakey, the editor of Retail Banker International and the group editor at Verdict. Welcome to the 11th Annual Retail Banker International Asia Trailblazer Summit and Awards. Congratulations at the kickoff to the first winners revealed and the highly commended companies in human capital and society. In a moment, we'll have the opening panel session on stage one with speakers from HSBC, Standard Chartered and Rcbc. But just a couple of very brief housekeeping points before we start. If you use the People tab on the top right-hand section of the screen, you can connect with fellow attendees, or you could try our one-to-one virtual face-to-face networking by clicking the networking icon on the left. If at any time you have any questions, you can use the chat window or email awards@meed.com. Today, I hope, is going to represent a day of networking, learning and celebration. And on the last point, in fact, on the celebration point, I really have to thank all of the banks for the huge care, the time, the effort, the thought that went into the awards submissions. Having chaired Retail Banking Awards for the last 15 years in London, the last 10 years in our Singapore event, I'm very conscious of the amount of effort that goes into awards submissions. This has not been an easy time, but the award submissions this year really do the awards proud, and it's very obvious from the quantity and the caliber of the submissions that a great deal of thought went into the award submissions. So from me and the other judges, a huge thank you. Now, I think we should kick off. I was given 10 minutes to introduce the awards and the summit, but we will hopefully, if you have any questions as regards how to use what I think is a great platform, you will learn as you go, or as I say, use the chat option. We have in the first session Sebastian, Arcuri, Anurag, Mathur and Lito, Villanueva from Standard Chartered, HSBC and Rcbc. Now, while I do want to speak to the three guys about some very important initiatives that have been undertaken during the pandemic, and each bank has a lot that they can be proud of in how they have helped customers, how they have optimized the digital channel during lockdown. There is a lot to be positive about in the post-COVID world, and it's no accident that we have HSBC and Standard Chartered and Rcbc to kick off the summit this year, because there is a huge amount going on. It's not new. You'll hear from Standard Chartered, for example, that optimizing their digital channels already is a 5-year program with a huge investment. But there are, I hope we will hear from the three guys, an awful lot to be positive about looking forward, when hopefully very soon we can return to something approaching a near normal. So can I ask, starting with Sebastian, each of the panel members just to say a few words to introduce themselves before we kick off the panel. Sebastian.
Hi, good morning, everyone. Pleasure to be here with all of you. My name is Sebastian Arcuri. I look after the retail banking business in ASA. ASA for Standard Chartered is South Asia plus the 10 ASEAN markets. And obviously, as Douglas was saying, we're very focused to make sure that we maximize all our digital channels during this COVID situation.
Thank you, Sebastian. Anurag?
Thank you, Douglas. Hi, everyone. Hope you're all well. My name is Anurag Mathur. I'm head of wealth and personal banking here at HSBC, based in Singapore. But I've been with the group for over 11 years and worked in the region as well. So it's a pleasure to be here and share a little bit about us and engage in the discussion.
Thank you. And Lito in Manila, I think.
Hi, yes, good morning. And yes, I'm calling from Manila. I'm Lito Villanueva. I'm the Executive Vice President and the Chief Innovation and Inclusion Officer for RCBC. And at the same time, also the Chief Digital Transformation Advisor for Yuchenko Group of Companies. Thank you.
Thank you. Well, as I said at the introduction, even notwithstanding the pandemic, there has been a lot of activity, a lot of investment, a lot of actual positive news coming out of each of your banks during the crisis. Can I start with Sebastian? It's only maybe 2 or 3 months ago, I recall a very important article that we covered, Standard Charter's initiative to ramp up massively your self-service offering to clients. And I think 29 service functions are now available to customers. How has the crisis affected your digital investment? Are you seeing a surge in digital usage during the crisis?
Yeah, Douglas, obviously, as you well said, this has been an ongoing program, and the migration toward digital channels had started a long time ago. What COVID did was to accelerate that migration. And our strategy, as we were all facing COVID with much uncertainty, was basically based on 3 pillars. Pillar number 1 was to make sure that we were going to be very close to the clients. And to do that, we enabled all sorts of remote communication via video conferencing, whether we use a tool called Blue Jeans. There are many other tools. Many banks use different tools. But here, the key point was the discipline of the relationship managers reaching out to consumers on a regular basis and being fully in touch with them. The second pillar of the strategy was to make sure that we could connect with those consumers on the video, but then take instructions as well, because consumers were not going to the branches, and we had to kind of find the solution for that. And, banks usually were not very good at taking video instructions from consumers, so we got to put in place a lot of procedures and digitize those transactions so that the RM could, from home, because we were not going to the office those days in many jurisdictions, being able to process transactions remotely on video instructions. And the third one that is the most relevant to this point is we basically released a series of service requests that could now be done on mobile without having to go to the branch. But here, perhaps the most important one was what we created as the generic service request. That was a simple free format text in our mobile application that allowed the consumer to give us any instruction he wanted to give us in relation to his account, and we will process that at the back end. To the consumer, that meant that he was able to execute everything digitally at his convenience, anytime, 24/7, and we will process that offline in less than 24 hours. That was done at a very low cost and at light speed. So the perception to consumers was, suddenly I have a bank that is being in touch with me, is able to take transactions, the bank is able to take transactions on video, and then if I want to do something digitally, there is nothing outside the remit I can ask for, and it will be done. We were extremely pleased to see our Net Promoter Score jumping in the top markets after implementing these solutions.
Well, that's about the best possible result and the best KPI if you're already seeing a positive impact on your NPS.
Indeed.
Lito, in the Philippines, one of the developments that I recall from recent weeks has been the launch of a super app. Can you say something on that and any other developments, initiatives that the bank has launched to help customers during the pandemic?
Yes. Well, briefly, we were quite surprised with the warm reception of the public when we launched this CarTech. This is the country's first and only Taglish inclusion super app. So we know for a fact that in the Philippines we have a number, practically close to 200 mobile apps operating in the Philippines, and on top of that, we have almost more than 4 million mobile apps worldwide. So the issue here is on how you can be able to stand out from the crowded space and be able to be recognized by the public. given the fact that in a pandemic scenario environment, what we did was really to pivot and ensure that we come up with relevant and responsive digital solutions for the market. So in that particular sense, when we were supposed to launch this Cartech as a super app on supposedly March 18, then the Philippine government declared the hard lockdown on March 16. So it was supposed to be 2 days after the hard lockdown. So we had no choice but to cancel all events because practically 100% of the Philippine population were locked down. So they were confined in their homes. So what we did was to pivot and to come up with a responsive, relevant proposition to the public. So practically, what the strategic plans that we had for 2020 that was crafted in the last quarter of 2019 was literally thrown out of the window because all of your strategies, all of the plans intended for 2020 would have to be changed given the new landscape. So what we did was it gave us so much time for us to, very quickly. In fact, after we launched it, the media, Philippine media regarded the app as the phenomenal or breakthrough app, given the fact that after 30 days of launch, it reached 1 million downloads. And currently, as of end of September, we were able to have more than 3 million downloads. And it's actually the quickest so far in terms of take up amongst Filipino consumers. And our monthly active user rate is at around 65%. Way above the industry benchmark of around 10%. So, I mean, what you could see here is really how you can come up with a very innovative tool by which the public would now be able to establish brand love and for them to really embrace it as their own. Because most netizens we would get a lot of comments from the social media saying that it is as if the mobile app is just talking to them. Because remember, in the Philippines, practically the day-to-day language would be Taglish, a combination of Tagalog and English, right? So, and especially in a developing country like Philippines, you have 70% unbanked and underserved population still in our country. So the main barrier here is communication. How do you now be able to make your message, such as phrases, banking terminologies or financial terminologies, or even the phrase financial inclusion or digital literacy or savings be able to be something that they could easily understand in plain Taglish. So that is the way it is. So that's why our motivation is not just to impress the public, but really to educate the public, because impressing them doesn't mean they really understand you, right? So it is not really a wow thing that we intend to do, but it's really more of how they would be able to identify themselves in that particular app. So far, we have seen an exponential growth. In fact, I won't mention the names because we have the top two mobile apps in the country, right? And for the past 7 years, they have been number one in the ranking of Apple Store and Google Play. But when we launched in July, we ranked number 4th, and in September we ranked number 1. So we toppled the top ranking mobile app in the Philippines, who has been lording it over for the past 7 years. So, and I think this is a phenomenal. I would definitely agree with media that the description for this super app was really phenomenal and a breakthrough app. So, and of course, we've seen it in terms of monthly active user at 65%, way above the industry benchmark of 10%.
Well, you said you weren't perhaps aiming principally for the wow factor, but 3 million downloads by the end of September sounds to me as if it's a perfect example of an incumbent bank transitioning to be a digital first bank, which I think is one of the core strategy of Rcbc. Would that be fair?
Yes, definitely. Yes. In fact, we were also surprised because in a span of 3 months during the period of pandemic, we we got three global recognitions. So we got the Asia Money Award as the best digital bank in the Philippines, the Southeast Asia Alpha Award, and also from I forgot the other names. The Global Economic Award, no, for the best mobile app. So I mean, in just a matter of 3 months during the pandemic period, and with this initiative, in fact, we've seen exponential growth in terms of transaction, even reaching up to four-digit growth rate. No, and in fact, even the government tapped this particular mobile app or this platform to disburse the social amelioration program or the cash emergency subsidy to the marginalized Filipinos or families. So we have disbursed to about 4.2 million families or about 12 million individuals during the crisis using the platform.
Thank you. It's brilliant. Anurag, at your end in HSBC, also a number of initiatives during the pandemic. Which initiatives do you think ought to be highlighted?
Thanks, Douglas, and amazing to hear the stories earlier. I think maybe just to zoom out a little bit, and I'll talk also about digital adoption during and post-COVID. But I think the first thing that we tried to do, when COVID hit, was really look after health and safety of our people and our customers. So I think that can't be underestimated because, I think everyone was worried. So there was a lot of time spent, obviously, in ensuring that we were equipping people to work from home, in ensuring that for the staff that did have to come into the branches that were open, we had all the safety measures in place for staff and customers. So there's a lot of effort around that. I think people appreciated that. We also consciously, ramped up the communication and the frequency of communication with our people as well. And just had a lot of open virtual town halls to hear issues, address issues. And I think given that they're the ones who are serving up our customers, I think that went a long way. The other thing that I would just highlight, which I know the industry has really leaned into, is the relief plans for lending. So obviously there are customers that have needed support as they've been unable to make payments. And we've, as HSBC, we've certainly leaned into that, and we've communicated it very broadly, very openly, and we have seen good take up of that. So I think that's been really important. I think for us as an industry to come together to support customers, and that's obviously on personal loans and cards, mortgages, and even relief on repayment of premiums or payment of premiums for insurance. So I think actually as more and more people work from home for longer, and in Singapore up to 50% can be back at one time, but actually the return to the office is more gradual, and I think the paradigm of mixing up working from home and office is going to prevail. So there's a lot of time being spent and work being done around also the psychology of work from home, the mental health aspects, making sure teams stay connected, making sure staff stay engaged with one another and not just with customers. So I think the well-being and mental health is another key aspect we've done a lot around. I think secondly, in terms of digital adoption, so again, there's a staff and a customer aspect. I think as Seb said earlier, we've really leaned also into enabling processes to be digital and remote. So we already had a lot of digital capabilities, which we've continued to develop through COVID. And amazingly, all our development teams around the region and the world have been resilient, and actually tech developments have continued right through COVID with even our developers working from home, which has been just amazing. So we've continued to actually enhance the mobile app and launch new features right through COVID, in fact. But even in the terms of the features we did have, in terms of really getting our customers to embrace it and our staff to embrace it, a lot of work done. Just a couple of data points. If I look at it now, the number of mobile users is more than the number of users of online banking in the browser by about 3 times.
Gosh.
And it continues to diverge. And obviously the mobile has multiple form factors, so there are people using it on their tablets. But I think that's really come into its own. And obviously, our customers have been more homebound, and so we have seen, of course, people have been doing more share trading, securities trading. So online share trading is up about 3 times on the same period last year. That's definitely a trend. And in general, we've seen people opening accounts remotely, people taking out new products remotely. Even and certainly, we've launched enhancements to the ability to do that. So now leveraging the KYC portal the government has, MyInfo, so if customers can use that to on their device, open a new account with us as a new customer within 10 minutes, take out a credit card within 5 minutes. So really very seamless and straight through, and we're seeing good take up of that. But even at the more complex end, on the advisory side for investments, if you'd asked me even 12 months back, would we have relationship managers working from home with laptops on Zoom in Jabber and having advisory conversations with customers and transacting, investment sales, and customers signing remotely through the live sign feature from Adobe, and for all that to be secure and for all that to be then auditable from a trail perspective, I would have said no way. But that very much is the norm now. That's actually how we're doing most of our business and servicing for customers. So it's not just servicing, it's sales. It's not just simple products, it's actually more complex products. And it wasn't just during COVID. I think this will continue for the years to come. So it's much more a hybrid face-to-face and remote model.
So positive results even during the huge challenge of the pandemic already.
Absolutely.
Just in case anyone joined late, can I make 2 points at this point before we come to the next section of the session? Any questions that you would like to fire to the panel members, please do so. Please engage. You can use the chat function, or you can email us at awards@meed.com. We do encourage your participation. And the other point is just to repeat what I said earlier, that if you want to connect with people, use the tab on the top right of the screen, or try our one-to-one virtual face-to-face networking feature by clicking on the networking icon on the left. Sebastian, to try and move forward and continue the very positive points that Anurag was making, looking post-COVID, there are some real interesting findings, I think, as regards the change in customer attitudes and how that's impacting the overall consumer banking side of the business.
That's right, Douglas. And I think the transformation that both Anurag and Lito were describing, in essence, are anchored on fundamental changes that we see in consumers' attitudes and behaviors towards banking. Today, we're very close to research and trying to understand what are those changes, what are consumers saying. And what we find interesting is that 90% of the consumers would tell you that they have changed their behaviors. 80% are rethinking the way their priorities are set up, their own values. And 70% of the SMEs are also telling you, I'm changing my strategy because my business has changed. So I think what's coming out of that is, number one, is the concept of family health and wealth as a key driver. And we need to understand what does it mean for us as consumer bankers, and how do we support that change. And one specific aspect that is coming out is the concept of an emerging savers mindset, meaning that in the past, it was a priority towards maybe credit cards was a product of extreme interest to consumers. How can I finance my next purchase or my next trip? Now we see a shift towards, hey, maybe it's now time to save for rainy days. I don't know how this is going to last. And that means that for us as consumers, as consumer bankers, we need to change and adapt to that. Clearly, the second one is I don't want to go to the bank. Please give me all the digital solutions at my fingertips. And that's why I think it was so important to put those digital solutions. Sometimes as bankers, we think that the digital solutions have to be end-to-end, straight through, no paper, nothing touches anything. And that's obviously the ideal scenario to bring the cost to serve down. But in a crisis like this, you got to be able to put the solutions at the fingertips of the consumer, even if at the back end, we then need to run and do all the processing on a straight-through process basis. And the third element that is coming out in the research is, okay, I don't want to go to the bank. I want to do things digitally, but I want to keep contact with you guys as bankers. I want to know what's happening to my portfolio. I think Anurag was saying this new norm of having the RMs talking to you via video conferencing, being able to then provide financial advice. Consumers don't want to miss that. It's just shifted from being done face-to-face to now being done remotely. And we should not underestimate the importance of doing this in compliance with regulations, in compliance with treating customers fairly, and being able to audit then what happened during those sessions with consumers, and do that in a secure way, as Anurag was saying. So it's not a simple task, but obviously that's the new norm of the consumer bank. And when you go to SMEs, they're telling you, I need to participate in the digital strategy. 70% of them are saying that I need to get more, I need to do more digital marketing. I need to get better at implementing some sort of solution for digital or e-commerce. So I think those changes are having profound impacts on our business models.
Thanks. And Lito, in the Philippines, the last time I was in Manila, for example, which is not that long ago, it still seemed very cash-based. There were long queues at the ATM withdrawal at the ATMs. Might we see an acceleration in consumers adopting cards, less reliance on cash as a result of the crisis? Are there other positives that we might witness in the Philippines market when we come out of the COVID crisis?
Well, that's true. I mean, in fact, in the Philippines, I think that this is also similar to other markets worldwide because of the pandemic. And in fact, we've been talking about this, that it was not fintech that disrupted banking, but it was COVID-19 that really disrupted banking, right? And practically all organizations across sectors and segments or industries. So in the Philippines, while you have seen a high usage of cash, we have seen a tremendous growth in terms of fund transfers, of course, going through the system in terms of digital person-to-person or peer-to-peer transfers. We've seen, as reported by our regulator, there has been a two-digit growth rate in terms of the impact of out of COVID because of COVID. And also the good news is that even the government mandated that all transactions in government must now be done digitally. So that's why even the disbursement of government grants, I mean, this would be the G2P or government-to-person disbursements, would now be done through digital channels. And also, there was also on top of that, because that has been the pronouncement of the government, even the payment for toll fees, for example, will also be done digitally 100% effective November 2. And other implementations as well. That's why even we have seen also the rise of, while we may call them informal, 7 to 8 million informal online home-based sellers, because knowing the fact that most Filipinos are practically confined in their homes, they cannot go to supermarkets or grocery stores, etc. So now there has been an exponential growth when it comes to the online sellers, and we are now estimating it to be at between 7 and 8 million home-based individuals doing online selling, and those online sellers are actually doing on digital payments as well. So meaning, because for the Philippines, of course, we know that the physical cash would also be a vector for the disease, for the virus. So that's why, as much as possible, we want to limit the exposure to the physical cash. That's why government and the private sector have been in partnership to really provide that awareness campaign to all the Filipinos about the need to really transition from the physical traditional transaction to a digital transaction. But I think to that point given by by some of my colleagues, they were saying that what will now be the impact, or would it be the same behavior post COVID? Because Anurag was actually right when he said that this pandemic will be with us in our midst in the next couple of years until such time that the a right vaccine is there, right, and until such time that 7.4 billion people in the world have been vaccinated. So in this particular case, it is a matter of how we can now coexist with COVID-19, with this virus, because otherwise, I mean, we really have to come up with ways on how we can cope up with this particular challenge and live our lives as normal as possible. And of course, with the use and by way of leveraging on technology.
Thanks. Can I suggest, Anurag, but I'll throw it open to all of you, that one of the big contrasts during this crisis with the financial crisis in 2008 has been that the banks are demonstrating that they can be customer-centric. They are helping customers during the crisis. There's the number of programs that you've mentioned, but the reputation of the banks, if anything, is being enhanced during this crisis, whereas with the best will in the world, during the financial crisis in 2008, 2009, there was very little positive reporting, given mis-selling and all sorts of regulatory breaches, and the banks came out of that crisis very badly, and many people would say deservedly badly. Can I suggest, Anurag, that the banking sector is going to come out of this crisis actually with its reputation enhanced?
Well, I certainly hope so, and I believe so. I think you're right, Douglas. It is different because obviously, the last crisis, really started as a financial crisis and then affected the whole economy. And I mean, it actually took years for the economy to recover. And you could even argue that the pumping of stimulus and liquidity from regulators, into the markets, actually has continued since. So it's in some ways the aftermath of the last financial crisis is still with us. But definitely that one did start with banks. I think this time, thankfully, we'd like to believe we've been part of the solution more than being part of the problem, because this started as a health crisis and a health disruption. And I think all the work that regulators have done and banks have done in the last 10 years has helped, because I think, as an industry, we are more robust now, and B, I think we are safer. It's never perfect. There's always work to do, but there's been a lot of work done around, compliance and general, I think, safety of the financial system. But yeah, so we and I think we all acutely have an awareness of our social responsibility. I think Lito articulated that very well. I think increasingly with everything that's happening in terms of environmental awareness and social awareness, I think we all feel that as people, as individuals. So I think we're all wanting to make a positive contribution through our work as well. But I do think that this one is a health disruption, which the aftermath of COVID will remain, in that the acute awareness for people to look after their health and feel safer. So that's going to change the way that they interact. As Seb said, perhaps less willingness to go into crowded places, perhaps more of a reluctance to visit branches, increasingly looking for remote digital solutions. And by the way, an expansion of the mindset. If I can be on a video conference or a webinar in Singapore, then how's it that different from being on a video conference or webinar with anyone around the world on a similar topic? So suddenly the boundaries go away. So I think that will create opportunities for banks as well. And I think we shouldn't underestimate the economic disruption that is already happening, inevitably will play out. So in terms of the impact on businesses, the impact on jobs, and I think the concerns that people have, consumers have around future earnings. And I think Seb mentioned about therefore inclination to save, and we've certainly seen a flight to safety, a flight to cash. Cash reserves for individuals and companies have built up, and they're going to be more prudent to think about how do they spend this, how do they invest this, particularly if the individual is less certain about their future earnings. So we also have to, I think, as banks adapt, our mindset, communications, and even products and services to meet their evolving needs post-COVID.
Well, the huge increase in deposits at so many banks surely is having an effect which you could not have foreseen a year ago as regards what you have to do with product innovation. You're going to be investing in new products or tinkering, changing products to take account of the deposits that are flooding in, surely.
Yeah, absolutely. And I think clients obviously now have a lot more options in terms of products than they used to, and increasingly through digital channels. But the risk appetite has always varied by segment, and I think is evolving because of the political uncertainties around and the economic uncertainties and the health uncertainties. Having said that, I think we know generally that for customers, it is wise to save, it is wise to stay invested for the long term, but it's just hand-holding them, through that and giving them all the various options and the guidance that we can. So certainly at HSBC, that's what we're endeavoring to do.
Sebastian, looking ahead, I hope it doesn't take 2 or 3 years to come out of the pandemic, but whether it's 1 year or 2 years or 3 years, there is going to be big adaptations at the banks and product innovation, which I think needs to be highlighted as regards what your bank is doing and planning. Can you say something about product innovation?
Yeah. Thank you, Douglas. I think this point of talking about post-COVID, how long it's gonna take, we don't know. So let's call it the co-COVID, when we have to coexist with COVID for a while. God knows how long that's going to be. And then how do we adapt and how do we innovate in that space? And I think we see a few trends. Trend number one, referring to this concept of mindset, savers mindset, and how you were referring, and Anurag was talking about people saving more. One thing consumers want to see, and they want to see innovation, is how do I track my expenses much more closely today than what it was before. When you have concerns about your future earnings, then obviously you're going to be looking at how much you save and where do you spend, and spend wisely. So one trend we see is consumers asking for, give me insights on where do I spend my money, how much am I spending in different areas, what is my budget, and help me to do financial planning. And this financial planning trend has always been there on the wealth accumulation side. We start to see consumers saying, help me also to understand how I am using my money, how frequently I swipe my card, in what type of establishments, am I spending too much on food or entertainment? Give me that in a consolidated view. So one of the things we did in Singapore, we now have that ability to do your own budget, to track your expenses in a very graphic way. Consumers want to see this in charts. They can be able to take different cuts, and don't give it to me on just one card. Integrate all of that for me. So that's one solution we launched in Singapore, and we see extremely high take up, particularly repeated visits once consumers start to build their own budgets. At the more macro level, I think the other trend that is coming and is already there and is happening and will continue to accelerate is how the consumer banks embed themselves into the internet economy. And this is basically being part of an ecosystem, being part of an e-commerce solution, being part of a super app, either because you own the super app or because you play in that super app. And an example of that is what we are doing in Indonesia, where we announced that we are partnering with Sociola, and we are doing banking services for their clients. And effectively means we integrate in an ecosystem, and we're able to present a banking solution for a partner. We can co-brand that banking solution, and now you're in an e-commerce site, and you're also able to do your banking at the same time in a seamless way without ever having to go to a branch. And that requires a lot of integration, a lot of systems, but it's a new way of thinking of consumer bank. Before, consumers used to come to you, ask for a product. Now we're putting the product or embedding the product or the solution inside the e-commerce side. The other one, of course, is what we do in Hong Kong, where we launched Mox. And that's a full standalone digital bank with partners, but trying to create a digital experience that is superior to what you can see in the consumer bank, in the traditional consumer banking space. So I think those are key trends that are coming. We are adapting and we're experimenting on those.
Without wanting to be aggressive and put you on the spot, if one of your investors says to you, Mox, there have been so many examples of banks that have got this wrong around the world. My neighbours on both sides of me, and I'm speaking to you from Edinburgh just now, and it so happens that my neighbours on either side of me work for RBS. And if I wanted to be unkind to them, I just need to say bo or boo, because Royal Bank of Scotland possibly had the worst conceived and executed digital bank, a brand called Bo that was more a case of now you see it, now you don't. And some of us wrote when it was launched saying this is appalling, expensive, ill-conceived, unnecessary, won't work, looks ghastly. Why are you doing it? And I mean, I've said that to neighbours. I stress neither of them had personal responsibility for the dreadful project. But of course, wisely, they dropped it, cut their losses, and Bo doesn't live on. But if I was one of your shareholders, I could say to you, just for even a moment of fun, Mox, have you learned lessons from some banks that made a mess of it? And how will you determine if it is a success? What sort of metrics will you be looking at in 6 months or 12 months to determine if it's succeeding?
Yeah, so Douglas, a very good question and a very important topic. Just to give you an idea, I've been involved in digital banks being launched from 2006. So I have some experience having launched one of the first, actually the first digital bank in Korea for another company. So I know how difficult this is. And I think you're absolutely right. I think many of those have failed. And the reasons, the important thing to highlight here that I try to explain is usually those reasons have changed, or some of the factors that brought down digital banks in the past are no longer there. So let's go through a few. Cost of technology has come down significantly over the last 10 years. Consumer attitude towards digital banks have completely changed. We now have a generation that is native in digital banking. 3 is, I think, the biggest mistake we ever made in launching digital banks in the past was that we thought that we were going to launch something on a standalone basis. And I think the beauty of a digital bank is the ability to integrate into digital ecosystems in a seamless way, in a way that in conventional banks is much more difficult to do. So given that, I think there is a play now for digital banks that are launched with strong partners, create that digital ecosystem. And let's not forget about this. In the future, we're also going to be using those native digital systems that are used by the digital banks into the conventional banks. So if you think about it, Douglas, whether we like it or not, we'll have to move away from our core, traditional, heavy, slow core banking processing systems to the new gen of banking solutions for core systems. And those they have to be digitally native, so you can integrate on the rest of the ecosystems. So I think we see this as a very exciting opportunity. And I explain 2 ways of doing this. One is you do your full launch, like Mox or any other standalone digital bank with big partners as we did in Hong Kong, or you do it as we are testing in Indonesia, where you find a partner and you do something that is simpler, but you connect into that partner and you provide banking solutions. Both, honestly, that is the future of our industry. Consumers will not come to the conventional banks anymore. They will be looking for a solution wherever they transit. In the past, we used to put a branch wherever the consumers used to go. Now we're putting our solution in an internet platform.
Thank you. Lito, you talked, I think I put 3 exclamation marks next to my notes when you said 3 million downloads by the end of September and active user rate of 65%. It deserves 3 exclamation marks. What are you going to do with this? What are you going to do with this new customer base and all of the data that next year you'll be gathering from these users? I'm really asking what next. Is it grow that 3 million to 5 million, 7 million, 9 million, or do more with the customers that are now downloading the app? Yes.
Well, in fact, that 3 million achievement for a period of 3 months was supposed to be our target for 2021. so we actually we overachieve our target for the year. So in fact, we had this problem before because of the crisis. We all thought that it would be, we're thinking, should it be moved to next year in terms of launch, or should we just go on with it, etc. So, but I think we did the right decision. So now, we overshot our budget. So in fact, we already met our 2021 budget. Anyway, so having to your question, I mean, what would now be, the end state? No, definitely. Of course, our objective is on how to capture as many Filipinos there are, because right now you're talking of about 55 million adult Filipinos that still do not have a savings account in the country. So that is still a huge number, right? So, and yet we have a number of players in the industry that practically would be covering or trying to cover that particular segment. So it being a super app, it is not just a payments app, right? So because I'm a firm believer of a holistic approach in terms of covering or trying to promote what we call inclusive digital finance. So what we have done is really more of accelerating it further in terms of really covering the entire market. So what we have is not just a payments app, but it really would cover 5 pillars of financial inclusion. So this would be payments, investments, savings, insurance, and lending. So this would definitely be all of this digital financial services are actually inside the app, and practically other features as well, like telemedicine, wherein people could now get consults from licensed physicians through online, through mobile, etc. Because our proposition has always been mobile first, right? Because in the Philippines, while we are an archipelagic country with 7,100 islands, still, while banks have been in existence in the country for over 100 years, still no bank in the Philippines has actually covered all the islands in the Philippines. Only mobile phones or mobile devices would be the only ultimate device that a particular individual in the Philippines would now be able to access banking services. And this is actually the bottom line of why we are doing this in the first place. So what we have launched as well during that period would be to offer sachet insurance on top of our sachet banking services, because in the Philippines, Philippines being a developing market, we are a sachet economy, because we have over 1 million mom and pop stores, and we're so in love with sachaying, right? So we love to buy goods in sachet format, right? So that's why even in financial services, if we can retail all of these goods and services, why can't we retail financial services to the mass market?
Thank you. One last question in 20 seconds each, because I'm very conscious of time and I don't want to steal any time from the next session. All of you, I'm sure, are traveling an awful lot less. If you're traveling at all, you'll be spending a lot more time at home than would have been the case otherwise. Is there any film or television program you've enjoyed watching on a box set that you wouldn't perhaps have been watching but for this appalling crisis? Anurag, Sebastian, Lito, what have you been watching at home that you can recommend to us?
Maybe I'll jump in. There's a very interesting series called Connections on Netflix, which is how different physical phenomena in the world are interconnected. And to me, it's close to my heart and also to my work, because at HSBC, it's all about connecting our customers to opportunities around the world. But it's a very interesting and fun science show I'd recommend.
Thank you. Sebastian, very quickly.
Two things. One, on the fun side, I love golf. So it's a fantastic time to watch all the best masters over the last 20 years. There is a collection on Netflix that you can watch. And then on a more serious topic, there is a great movie about the social dilemma and the impact of social media in our lives. I think it's a great movie to watch.
Thank you. And lastly, Lito.
Well, definitely binge watching is really a must for you if you are doing work from home, especially. I think that has been one of the things that we've been doing just to keep your sanity, right? Because while working from home, your working hours is much extended than going to the office.
Indeed. Gentlemen, thank you. You've done me proud. I am hugely grateful to you. We're just about finishing on time. Thank you again. Thank you to Sebastian Arcuri from Standard Chartered, Anurag Mathur from HSBC, and Lito Villanueva from Rcbc. With that, you'll be glad to get a break from a coarse, rough Scottish accent for a wee while. I'm going to hand over to GK, Head of Marketing, Digital Content, UX and Analytics at Maybank. And the important point to flag up, GK is on stage 2. Stage 2 for GK from Maybank. I'll speak to you later. Thank you again.